Hello traders, you're welcome to this video and you're welcome back to the channel. So in this particular video we are going to be unlocking the best stochastic settings specifically for the 5-minute chart. Okay, so if you are looking to improve your trading game, you won't want to miss this. All right, now, what is the stochastic indicator? It is a momentum oscillator that compares a particular closing price of a security to a range of its prices over a certain period. Okay, now I'm just going to be adding the stochastic oscillator to the chart. I'm going to be changing this to the 5-minute chart as well. Okay, now the stochastic oscillator helps us to identify overbought and oversold conditions in the market, which is key for making trading decisions. Okay, now let's get into the best stochastic settings for the 5-minute chart. The typical settings for the stochastic are typical settings are 14 for the percentage K and 3 for the percentage D. Okay, you can see how that looks like. All right, but now for shorter time frames like the 5-minute chart, I recommend tweaking this to 5 for percentage K and 3 for percentage D. Okay, now we can see this. You can see how the stochastic oscillator responds faster when you reduce the period. Okay, when you reduce the values here. Okay, you can see the way the stochastic indicator changed. Now, these settings help to react faster to price movements, providing more timely signals without being too noisy. But remember, it's all about finding that sweet spot where you get enough signals without being overwhelmed, right? Now, let's look at how you can apply these settings in real-time trading. When the percentage K, okay, the percentage K is going to be our green line, the main line. So when the percentage K crosses above the percentage D, that's when the main line crosses above the signal line, that's a potential buy signal, okay? While a cross below, like what happened here, may indicate a sell signal, okay? Also, keep an eye on the overbought and oversold levels, all right? A reading above 80 signals overbought conditions, and below 20 signals oversold conditions. This can help you decide when to enter or exit trades. Alright, now here are a few tips to maximize your success with a stochastic indicator. Always use it in conjunction with other indicators for confirmation, such as moving averages. For example, let's just add on the moving average to the chart. Okay, and then you can also add your RSI just for additional confirmation, just for additional confirmation. Okay, and it's very important that you practice on demo accounts before going live. Now, the stochastic indicator is the main indicator that we are using on this 5-minute chart, right? So you have a sell signal when the main line crosses below the signal line in the overbought zone, and we can see that right after that you can see that the price sold all the way to this point, right? And then you can exit your sell when you have a bullish crossover in the oversold. So we would have exited our sell at around this point and would have caught about 55 pips. Okay, when you enter a sell, you can set your stop loss right above the previous swing high. Okay, and then as for a buy trade, when you enter a buy trade, for example, we had a buy signal around here, you can set your stop loss just below the previous swing low. Okay, just below that, the immediate swing low, in fact, or you can use the swing low that preceded the one that is just forming newly. Okay, depending on how tight you want your stop loss to be. And then for the take profit, you can consider using the the sell signal, which is when you have a bearish crossover around the overbought zone, you can use that to exit your buy. Okay, and then in terms of confirmations, you can use the moving averages for additional confirmation. For example, we can see that after this stochastics gave us a buy signal, we can see that eventually price broke above the moving average, confirming that buy. And then, although the stochastic indicator gave us a signal to exit our buy around here, we can see that the price of the asset was still bouncing off the moving average. So we can use the moving average, because remember that moving averages serve as dynamic support and resistance. So we can use the moving average to also determine when to exit our buy. For example, if we notice that the price of the assets, the candlestick did not close below the moving average, then we can consider trailing our stop loss so that the winning trade will not turn into a losing trade. We can just trail our stop loss and then watch out for what happens next. If the price breaks below the moving average, then we close our buy, or we can just allow the trailing stop loss to just close the buy, or we can just watch. What if the moving average holds its position and then we find the assets bouncing off the moving average and going up, then it shows that the buy is continuing. Okay, so in that case, we'll remain in our buy trade until we finally have a break below the moving average. Okay, that one is if you want to use the moving average to exit. Okay, then as for our confirmation with the RSI, we can see that the RSI, when this stochastic gave us that signal, the RSI was also pointing upwards. Okay, it was showing that it's a bullish move, right? So that was also an additional confirmation. Okay, so it's important that you also make use of, other patterns, like trend lines. You can see the trend lines can also serve to give you additional confirmations, possible reversal zones, and possible entry points, and exit points. And then it's important that you also have your horizontal support and resistance levels. Okay, they also play a very important role. And watch out for candlestick patterns as well. You can see that this particular resistance zone, it was a resistance zone before, eventually you can see here it turned into a support. So this would have been an additional confirmation when we got a buy signal from this stochastics around here. We got a buy signal and we found a doji, we found a candlestick pattern. At the same time, price was bouncing off this support. At the same time, shortly afterwards, we had, in fact, it's a morning star we even had around here. And shortly afterwards, we had price breaking above the moving average. Okay, we had multiple confirmations, and we can see the RSI was also pointing upward. So that would have been a perfect time to buy. Okay, and then would have considered exiting around the resistance zone as well, or we can wait for a break below the moving average to exit, or we can wait for a sell signal from the stochastics to exit our buy trade as well. So basically that is it for this strategy. Thanks for watching. I hope you found this video on the best stochastic settings for the 5-minute chart helpful. If you did, don't forget to click that subscribe button for more trading strategies and insights. Share your thoughts or questions in the comments below. Happy trading.